Christian Family Radio. Good morning. We are Derek and Bridget hanging out with Clark Hayden from Lock Shield Partners because Wednesday on the show, it's Money Mindset, where we help you to see money as a tool, not just a goal.
Hoping that this segment is going to be very encouraging to you because we're going to talk about reducing our taxes. What are those breaks and reductions? Clark, help us out. Everybody in CFR listening land just went, what? I'm in.
Oh, they're hanging on every breath. So when it comes to lowering our tax liability, the IRS basically classifies that in two different buckets. So we have deductions. You've probably heard that term before.
Oh, yes.
And we have credits. So let's talk about the difference there. So high level, tax deductions lower your income. So for example, let's say we have a household that makes $100,000. When they take the standard deduction, now their taxable income is about $70,000. So deductions lower your taxable income. There's all kinds of different deductions. There's the standard deduction, which is what most people do. Some people take itemized deductions, which are things like mortgage interest or charitable contributions or
where we need a lot of receipts and documents to prove.
A lot of receipts, a lot of documents, and all those together have to be more than your standard deduction, which is a pretty high threshold now for most people. There's some other common deductions like student loan interest or IRA contributions that can also come off the top of that. Credits, on the other hand, reduce your actual tax liability. So let's say that back in the day, Bridget had the child tax credit. If she owed $1,000 on her taxes when they were filed, now all of a sudden she gets to add in the $2,000 child tax credit. So instead of owing $1,000, now she gets a $1,000 refund.
They're paying me. They're paying me. That is sweet right there.
That's
I like
right.
your math.
So credits reduce your liability, your actual tax liability. Some credits are what are called refundable credits, which means that if they reduce your liability all the way to zero and then some, just like the example we just used, you'll get a refund from that.
Okay.
Then there are some credits that are classified as non-refundable, which means that, hey, we'll let you take that income all the way to zero, or we'll let you take that tax liability all the way to zero, but then we're going to cut you off at that point.
So this is kind of how my mind works. Is it safe to say that kind of a visual of this would be that deductions are kind of on the front end and credits are at the back end, if
That's
you will.
exactly right.
Like I've got to pay or I'g got to, get a refund.
You got it, Derek. Yeah, and even
that simplifies it for me. Maybe for some other people.
Even the visual representation of the tax return itself, the deductions will be on the first page, and the credits will be on the second page.
All right.
So you got it.
Learning more as we are in the midst of tax season, ChristianFamilyRadio.com to dive in deeper to this topic, or visit our friends' website. Their website is LockShieldPartners.com.